We now welcome an economic analyst to discuss the recent announcement from the Bank of Namibia, which has reduced the repo rate by 25 basis points to 7.5%. This significant move aims to stimulate economic growth amid various challenges facing the country. We will explore the implications of this decision on inflation, consumer confidence, and overall economic stability in Namibia. Joining us now is Vistorina Nauyeleto. Vistorina, good evening and welcome.
Good evening, Nina. Good evening to the viewers.
Thank you so much for being here. Just to start with, Vistorina, how do you anticipate the Bank of Namibia's reduction on the repo rate to 7.5% will affect inflation and economic growth in the short and long terms?
Of course, this was unpredictable. It was shocking in a very good way to a low-income earner, to a consumer, to an individual, to all citizens of the country. So repo rate is the rate at which the Bank of Namibia lends money to the commercial banks. So the Bank of Namibia controls now the inflation through its monetary policy committee. So it was long overdue. Looking at the short run of the consumer, which is the individual now, the individual household, the consumers are now able to actually pay lesser repayments to their houses, to their cars, little payment, extra little payment also to their interest rate on their loans, on your property, on your tax interest, on literally most of everything. So it's a kind of like a relief on a household income in this particular juncture. Obviously, it's a short run because it's being monitored by the committee, which will be probably take for literally 3 to 6 months. But for now, we're welcoming it. Very good. In the long run, we're assuming that there will be no excessive borrowings in terms of now the consumer, but this is obviously being critically controlled by the bank. So the monetary policy adjusts the interest rate and also tighten up the inflation in the economy.
Yeah. You mentioned, of course, that this is welcome news for the consumer and at household level. So, in your opinion, how might this change? How might this change in the repo rate influence consumer and business confidence within Namibia's economy?
When the rate is a bit higher, it becomes a bit expensive for a normal business owner to go to the bank and get that loan. They probably might even not afford it. So now it becomes a bit higher for them to go ahead with the investment projects and their capital projects. It's the same with the normal individual, which is now the consumer. But when the rate is a bit higher, it gives them that flexibility, that financial freedom to actually get to do their work on time and also increase the economic activity. Now, this it now encourages the business and the individuals to actually widen their gap and also just be able to boost their investment and their economy. Now, due to the drought, the economic activities of the country have been a bit lower, and it remains on a recovery path. So this came as a very good idea, a very good pace.
When we're talking about, things such as mortgages that you've mentioned, I also want to talk about food prices, petrol, transportation. How does this affect that? Your low interest rate, it translates into now the low rates on your houses. That extra income that was supposed to go to your house, you now have an extra on your pocket to go and actually do other stuff, which is on your necessities, which is now your petrol and then your fuel and your transport. So the consumer is having an extra on their pocket. Vistorina, how does Namibia's current monetary policy, particularly the repo rate adjustment, compare with trends, in our neighboring countries, and what implications does this, of course, have for regional economic stability?
Currently, our exchange rate is still pegged to the South African rate. However, it narrows this margin and also safeguards this link. So it's like a neighborhood link already. For example, let's say in other economy, the gradual it seems that there's some gradual disinflation in some other economies, but we don't have the same inflation as South Africa, but we are safeguarding that link in between our pegging of our dollars to the SA dollars. However, let me just say, Nina, that all economies are still following their tailored policies that suit their unique circumstances. Like I said about the drought in Namibia, it's not the same, it's unique in every economy, even if it's our neighboring country.
Mm-hmm.
Yeah.
On that note, Vistorina, your final remarks?
I still encourage higher savings. Let's not indulge in further unnecessary borrowings where we cannot be able to repay it, because this is just a smaller adjustment to our pocket for now.
Fantastic. Well, we thank you so much for your time here this evening and joining us. Thank you so much.
Thank you, Nina.
Well, there you have it. We're going to take a look at our weather when we come back. There's some more conversations lined up here on the Daily Roundup, so stay with us.